All right, in this video, we're going to be talking about what is an A plus ICT turtle soup setup, right? For me, at least, okay? Now, there's different ways to go about, trading the turtle soup. And I've actually made a video on turtle soup already, which I'm going to link in the video description that I want you to watch after you watch this one. But you'll see a little bit of a different criteria in this video. And the criteria that I list in this video is whenever you have everything that I mentioned, it's very high probability. And there's one little thing that makes it higher probability. And I'm going to tell you what that is. And all right, so let's pull up some examples for today. Now let's just start with EURUSD since we're already here, right? On this chart right now. So I had a point of interest noted this morning for EURUSD, which I posted in my Discord chat. So just so you can know that I'm not just talking and that I post this stuff beforehand. I'm going to show you what I was talking about when I say this. All right, so here's what I'm talking about. This was posted in the mentorship chat as well as the free Discord chat. And for any of you guys that want to join the free Discord chat, get my daily watch list, ask me questions, consume my educational material, there should be a link to that free Discord chat in the video description. So make sure you join that after you get done with this video. All right, you'll love that chat. It's just a great community. But here's what I was talking about. I said the ideal scenario. Now I got the typo right there, right? Ideal does not mean it will happen, but if it does, it's a really nice setup. So what I'm saying is if we can get this, which it did a little bit later on in New York, that is a very high probability scenario. What do I have indicated right there? What do I have? What am I telling you that is right there? What is that? That's a turtle soup, guys. What is a turtle soup? Well, turtle soup in simplest terms is a fake run. Okay, it's a fake run. And that's what I have indicated right here. I'm indicating that it's going to want to push up. It's going to look like it's going to move up higher. It's having a breakout. It's looking very strong, but then it pulls the rug and it moves lower. That's what I'm indicating right here. I'm indicating a turtle soup scenario that could play out here. And I'm going to show you and I'm going to demonstrate how I came to that conclusion, how I came to the conclusion that this thing wants to move lower, because it did. Later on, it took out that low, or it took out these lows beforehand, but then it had another move lower later on. Let's talk about it. Here's the move higher that took out those highs that I was talking about right here. So I want you to look at this, guys. Now let's actually take it a step further and let's go to the lower time frame here. If you're looking at this lower time frame chart, okay, and let's go to replay mode to clean it up a little bit better here. In real time, whenever this is happening, this thing's pushing up. It's looking very strong. If you're a trader who is solely focused on this lower time frame chart, I mean, this thing's just stacking up. Look at it, stacking up, just consistently moving higher, moving higher, moving higher, moving higher, moving higher. It's consistently moving up. It looks so strong, right? And it's breaking out. Bulls are all over it. It's pushing up. Look at that big, strong close up there. Look at that big, strong push up right there. Bulls are all over it. Bulls are all over this thing. They're looking for higher prices, okay? And that's what this does. That is the nature of the turtle soup. It's a fake run. So it'll look like that beforehand. The turtle soup will look like that beforehand. It'll look like it's going to move up higher, because this is the bearish example. It's going to look very bullish. It's going to look like it's pushing up higher, and then it's going to pull the rug. So here's how I came to the conclusion that this wants to move lower. And here is a very important component to having the highest probability turtle soups. That important component is your higher time frame levels. Okay, no debate on it. Just no debate on it. No ifs, ands, or buts. Whenever you have a higher time frame level, your odds of success go up just by doing that simple thing alone. By having a higher time frame point of interest, your odds of success, they go up. It becomes higher probability. So I want you to pull up this chart. Let's go to a higher time frame chart so you can see what I'm talking about here. Let me adjust this chart. My chart's all wacky. There we go. So you can see this is bearish market structure. If we're shorting this, we're trading with the overall trend, because this thing is looking very weak. It's very bearish. It's consistently putting in lower highs, boom, lower highs, boom, lower highs, boom, lower highs, boom, lower highs, boom. It's consistently making new lows. It's a very bearish trend. We can establish that. But I want you to, because this is that push up. Look at my cursor. See how we see this wick right here of this big red candle that you see where my cursor's moving? You see that wick right there that's moving up right there? Look at that wick. That was that move up on the 5 minute that I just showed you. But look how you look at the 4-hour chart, and it's like an entirely different world. You get an entirely different view of what price is doing. And guess what? This is what it's really doing. This is the real storyline. This is what's really happening. Okay, that 5 minute, That was bait. That was simply bait. That was simply bait to motivate longs to pile in this play to create that liquidity. That's it. Its intention is to create liquidity, okay? And of course, to take the buy side liquidity up here. But you do two things at the same time. You take out buy side liquidity on this move up in the turtle soup, but you also motivate longs to get in this because it's very bullish. It's a lot of momentum towards it. And what are they going to do? Where are they going to keep their stops? Underneath the support. So you kill two birds with one stone, right? So this is what we saw. This wick up, we come up, and what is this? This is a higher time frame level. That is, let's see, we got our highs high in the middle right here where my cursor's moving. And then you have a lower high on the right, you have a lower high on the left. That makes that a swing high. And we understand above swing high levels, there's what's called buy side liquidity, buy stops. That is a higher time frame level. We have higher time frame buy side liquidity right here. That is coming up and it's taken while operating. Here's the key thing, while operating within a bearish market structure here. It's always best if you're a trader with the trend. And I'm going to show you some other examples in this video as well with trade setups that weren't really following the trend, that were still nice setups. But with this one, it's aligned with the overall trend. And you're taking out, this is the key thing with the turtle soup. You want to see a higher time frame level that it's running up into. It's running up into a higher time frame buy stops right here. And not only that, you also have this old low right here, which is serving as resistance as well, being inside of an imbalance. And whenever you have an old low like that inside of an imbalance, it's a very sensitive price point. It's much stronger. It's amplified whenever you have it inside of an imbalance like that. And the same goes for institutional price levels. The same goes for order blocks, etc. When it's inside of an imbalance, it's more powerful. It's respected more. So think about everything that I just told you. Bearish market structure, taking out buy stops, testing this old low. So now we can come to the conclusion. Let's go back to the lower time frame chart now. This is what I'm talking about. This is that 5-minute move up. That was that little portion of that wick on that 4-hour candle. It's right here, moving up into this level. So look how it cleans it up. Look how you can see what's really going on, and you can understand. You can come to the conclusion, turtle soup. This is a turtle soup right here. Okay, because we have the higher time frame influence. Or it's a potential turtle soup, because there's one more key part of the equation that we want to see here. Some people, they'll just short it up into the first move up higher. And I'm not saying you can't do that successfully. There's ways to go about doing it. But the safest bet is to wait for a reaction. And I think with this one specifically, we had it on the 3-minute. So when I say a reaction, what I mean is you need a lower time frame shift. You need a lower time frame shift off that point of interest, off that higher time frame point of interest. Because look, it's very bullish, but now we want to see a change in trend to show that there's actually institutional sponsorship to send this thing lower. Still no shift. Have we cracked a short-term low yet? No, it's just a pullback. So we need to wait. Boom. There's your shift. It's confirmed. Market structure shift. This is right after taking higher time frame liquidity. This is right after testing that higher time frame point of interest while operating within a bearish market structure. It was bullish. It had a change in trend. And now where is the next draw? Well, the market structure is bearish, remember. So where's the next draw going to be since it's bearish? That low right there. That's the low. That's the next draw because it already took out the buy stops. So now it wants to do what? It wants to seek these sell stops down here. That's the next draw. And now we have the lower time frame. We have the lower time frame shift. So you can look for that. Now look for a push up to get short. Pushes up for you. Sells off, takes the low. Classic turtle soup right there. Pushes up, it looks strong, it baits, again, it takes out existing shorts that have their stops above that high because it's resistance. Shorts keep their stops above resistance, we take them out, and at the same time, we create liquidity because we have longs that are getting in this thing, and also longs are going to keep their stops beneath this low as well. See right here? Because that's a level of support. So it creates that liquidity because longs are buying this breakout, they're looking for higher prices, then it takes them out as well. That's the intention. That's the intention of the turtle soup. And that's what we saw play out, and then it sold off and it took the lows. So USD CAD, this is another turtle soups play that we had this morning. And here's our higher time frame point of interest. You see this old high right here? This was our level of support right here this morning that we had identified in chat. That right there. So right away we've identified our higher time frame point of interest. Now let's go to the lower time frame. So I want you to look at this. So look at this right here. This is what was happening this morning in London session. And again, just so you know, I'm not just going back now in the replay boat and cherry picking stuff. I'm gonna pivot to Discord real quick because I need to actually show receipts, right? So here we are again, time stamped, as you can see, 3:31 a.m. that I posted this, and we had our eyes on it. I posted it in the mentorship chat, but also in the free Discord chat. So you can see right here, I said 1 hour market structure is bearish, but that fair value gap is serving as a drawn liquidity up above. So you can see this right here. This area, this fair value gap, is an area that was not efficiently delivered. It's serving as a draw because it's going to rebalance that price action. And you have high bouts of liquidity right below that draw right here. See that where my cursor's moving? And remember, look right here, pay very close attention, and remember, testing higher time frame support right now, setting up real nicely for a stop run. What do I mean by that when I see a stop run? Right there. I always tell my mentees this, and it cleans it up so much. I want you to like put yourself in the mind frame of a short who's in this play right now that's looking for lower prices. Forget the long play. I want you to look at it through the market, the opponent market participants thought process. Look at it through their lens of view. They're looking for lower prices. This thing had this big displacement lower, absolutely. It had that big displacement lower. It came up, it topped out, it's moving lower, it's making a new low of day. It's looking so weak right now. And what's that going to do? That's going to bait in a lot of short sellers, and existing shorts are going to trail their positions. So now you need to ask yourself this question right here. Where is the next key level of resistance? Where is the next key level of resistance on this thing that's moving lower down into our higher time frame support? Right here, look at my cursor. That old high right here, right at the entrance of that imbalance, which is also our draw on liquidity. See how it's starting to connect here? It's just setting up perfectly for a stop run. And I made that very clear in Discord. And I said, setting up real nice for a stop run. Look out for that here soon. If the lower time frame can provide a reaction off this support, what do I mean by that? When I say a reaction, I mean a lower time frame shift. That's it, just a lower time frame shift to show that there's actually institutional sponsorship to move this thing higher. Then you could take it up into that buy side liquidity. Okay, but would be careful holding past that considering the market structure is bearish. And after we take those stops, I'll actually be hunting for a potential short, which that played out real nicely later on as well, as you'll see. So that's the thought process. This is our turtle soup right here, guys. It's coming down and it's sailing off into our higher time frame point of interest. And now all I'm looking for is a reaction, because right now it's still very weak. We've already identified that we have a big bucket of buy stops right here. We're going to want to attack these buy stops, because remember, we put ourselves inside the shoes of short sellers who are already in this, that are looking for lower prices. We understand, we can anticipate that their stops are going to be above that level right there. We can attack those stops. But now I want to see a change in trend. I want to see that there's actually institutional sponsorship off this level right here. So we wait for a change in trend. There it is. Change in trend. Why is that a change in trend, Mike? We cracked this short-term high right here. See that? Highest high in the middle, lower high on the left, lower high on the right. It cracks it. That's a shift in market structure. Look at that strong close above that level. Look at the sheer conviction on the close above that candle. That's very bullish. And then it pushes up. Now, it didn't give you much of a pullback, of course. So there is that. But I'm just kind of demonstrating what that turtle soup looks like here. Okay. There it is. There was your fake move. It comes down into higher time frame point of interest. It looks very weak. It looks very bearish, which creates that liquidity right here, because we understand shorts are going to keep their stops right there. But because we're knowledgeable of our higher time frame chart, we're utilizing higher time frame levels, and we look for that shift off of that level. We identify that change in trend. We can then attack those buy stops up above. That's it. It's just a scalp play. And because the 1 hour, as I was saying, because the 1 hour is technically still bearish, we got this imbalance up here and all this, you wouldn't be like swinging for the fences. It's just a little scalp play. You're in it, you're out, you're done. Take your money, run. That's simple. Okay. And then, as I was saying, I was looking for a short, and then it did end up rolling over later, as you can see off that imbalance. Again, all time stamped in chat. As always, all time stamped in chat. All right. And I think the last one I'm going to do here is NZDUSD. So same deal, NZDUSD. Look what I put right here. Just sweeped higher time frame 4 hour buy side liquidity right here. We sweep that high. See, we got our swing high right there. We came up and we sweep that. It's in a deep premium, sweeping higher time frame buy side. So we have a higher time frame point of interest here. We've identified that. We've already concluded that that's a key part to having A+ turtle soups, is having a higher time frame level. Now this 1 hour, it looks quite bullish, right? Look how it's ripping up right there. Look how I just put in a swing low. It's ripping up. Yes, 1 hour is very strong at the moment, as I said. But think about what I just told you in the previous example. Put yourself inside the mind frame of a long. Put yourself inside of the mind frame of a long who's looking for higher prices on this. It put in this swing low. It's making a new high of day right here. It's ramping up with aggression, with strength. It's cracking these highs. Think, how breakout traders think it's got momentum. It's going to the moon, right? What does that do? It creates liquidity, because now we have sell stops beneath this level for longs that are looking for higher prices. Why? What's the logic behind that? What's support? Where else are they going to keep their stop at? Where? Where do the big bulk of traders keep their stops at? Like everybody basically does it the same exact way. It's underneath the support. Where's the next level of support? It's literally right there. But we have the perspective. We understand that it's taking out higher time frame buy stops. So that higher time frame level is likely to trump that and take those stops. That's the importance of having that higher time frame outlook. So we can anticipate that this is a turtle soup, that this is a fake run, and it's going to run these stops because that's the next available liquidity pool. And it's also in a premium marketplace. That's another key thing there. It's in a premium. This pullback was in a premium marketplace, which sets up real nicely for stop runs. And then look right here. And as I said, but a scalp play short here. That was, again, that's the setup I'm teaching you. That's the turtle soup right here as it was setting up, time stamped 3:26 a.m. And again, this is the date that I'm making this video, that this setup was on 12/6/2023, December 6, 2023, for anybody that's watching this in the future that wants to go back and study the chart. So, but scalp short play right here, because it came up, it was looking very bullish. It tested the higher time frame point of interest. It had a shift, fair value gap confirmation. I looked to target the sell side liquidity below, tapping into that fair value gap now as I'm typing this. So it was setting up as I was typing this. There's the higher time frame level. Let me just put it right here. Just so you see right here, we took out that level on that push up. We've identified that. The lower time frame chart, yes, it looks very bullish. It looks very, very bullish when it's ramping up. Look at this thing. Forget all that stuff to the right happened. And if you're looking at this in real time, it's looking so, look at this thing, guys. Look at how it's making a new high. Look at how it's breaking out with such aggression, with such strength. That looks very bullish. There's no denying that. But guess what? We have the higher time frame perspective. We're knowledgeable what's occurring on the higher time frame. We're not lost in the lower time frame noise here. We understand that this is manipulation. We understand that this is a turtle soup, likely. But I need the reaction still. That's what I want to see. I want to see it actually confirm that there's institutional sponsorship off this level. I need to know that smart money is home. ICT likes to use he's used the analogy in the past of like the elephant jumping in a small kiddie pool, right? If you watch this video, you know exactly what I'm talking about. And that's like smart money can't hide. When an elephant jumps in a small kiddie pool, what's going to happen? That water's going everywhere. It's splashing everywhere. They can't hide. They can't hide. And that's what I'm looking for on the chart. After we come up to that level, I'm looking for that elephant to splash. That's it splashing. Look at that big candle. Look at that big displacement. Look at the explosiveness it has. That's that elephant jumping in that pool off of the higher time frame level. So now we can establish that this is likely our turtle soup. It was ramping up. It looked strong. It pulled the rug. It pulled the rug. It took out the buy stops, and now it's taking out sell stops. Pulls up into the imbalance, gets short. Boom, there it is. Sells off, takes the lows, and you attack those sell stops down below in the 1 hour chart that we already identified, because we can anticipate there's a big bucket of sell stops right there, because this thing was looking very bullish. We can anticipate that. Higher time frame level, lower time frame change in trend, take it down to the next draw, which is the sell stops right here. This shit repeats. It repeats over and over and over again. It repeats. The higher time frame level is going to make your plays higher probability. Those are the best plays. Again, I have another video on turtle soup, which I'll leave in the link, which I'll leave in the video description. But I want to go a little bit more in detail with this about the best setups, the A+ type of setups. And the best setups, regardless, they're always going to have a higher time frame level. It's always going to have that higher time frame influence. No doubt. There's no debate on that. Those are the best plays. So if you enjoyed this video, leave a like, subscribe to the channel, and I'll keep the content coming.